Hello, everyone. Today is another episode of the Navvai Shift. We have a special guest, Joel Blake OBE, founder of GFA Exchange. Pleasure to meet you, Joel. How's everything going on your side?
I'm very well, thank you, Damari. Nice to meet you. Nice to meet you, Darnell, and thank you for inviting me to be a part of your journey.
Perfect. I'm much appreciated. So just for our viewers listening, can you give a bit more insight into GFA Exchange and you also, please?
Sure. Well, as you say, my name's Joel Blake. I'm the founder and CEO of the GFA Exchange. We're a technology platform and consultancy service that helps finance providers use AI-powered insights to manage risk. I guess what makes us different is that risk is really targeted at helping them identify high-growth businesses from underserved markets. So we help them to expand their business whilst helping those who need support the most across different markets. And we've been going about five and a half years now, and I'm a solo founder, bootstrapped the business to where it is today.
Perfect. I much appreciate it. And I guess your business is definitely doing amazing things by being voted top 50 most innovative financial technology companies at the end of last year. So congratulations for that as well.
Yeah, that was an absolute blessing and humbling. It just makes you realize that all the kind of stuff that happens on behind the scenes, or the blood, sweat, and tears that people don't see, it's worth something, and it gives you motivation to keep pushing little things like that. But so yeah, it was nice.
No, that's amazing to hear. So perfect. So in terms of GFA Exchange, what's their role in helping financial companies stay competitive in a digital first world, would you say?
Yeah, I mean, for me, when I started the business, it was on the back of spending about 15 years in the financial services sector prior. First coming in as a diversity and inclusion consultant into the space, and then moving into financing ourselves and previous business. We funded businesses across the UK. I think we funded about 800 companies in our time there. And in my career, I've deployed about £250 million worth of financing into UK businesses. So I had a great understanding of the industry, but it was more about how can we use technology to really make things move faster, particularly when it comes to meeting equitable and inclusion activity. This, I guess, narrative that higher growth businesses can't grow and scale, and I just didn't think that was correct. I felt like there was potential in every business, and technology could show that. And so GFA was about helping traditional organizations remain competitive by getting into new markets, but at the same time helping them manage the risks of doing so. Because often it's a lack of information about those newer underserved markets that help them to make the decisions to not go into them. Providing a much more evidence, data-driven approach to doing that, we felt that we can help those organizations unlock their resources to help those most in need, whilst also maximizing returns as an organization. And we felt that AI within technology was a perfect component to do that.
Amazing. So then what would you say the biggest challenges you're seeing financial companies face when trying to stay competitive?
I think in this current market, which is obviously very volatile, there's a lot of geopolitical activities that are challenging the market. Many organizations are still trying to bridge the gap from what they've been used to doing to where they now need to be. And in bridging that gap, there are so many new innovations, new technologies, new disruptive ways of working that adopting the right method for them or the right technologies for them is often the challenge, particularly when it comes to seeing the impact of these things and making sure that they can then justify the cost and resource and invest in these things because they've seen the impact happen in other areas, but not necessarily have put those solutions in place to see whether the impacts will happen for them. And so there's a risk factor in making those jumps and taking those leaps. So I think that's definitely the volatility and disruption is one. I think the other is talent. There's an ongoing war for talent, as they say. But I think in this day and age, the talent themselves know what they are worth to an organization. Great talent is at a premium. Keeping that talent is a long-term investment. And many organizations are challenged with finding the right types of people and being able to keep them for the longer term. So I think that's the other challenge. Disruption and the right type of people.
Do you think it's a training aspect in terms of when you talk about people and having to make sure high value people are staying within the company? Do you think it's also a training aspect in terms of adopting new technologies as well?
It's a good question, Damari. I think training is about trying to transfer knowledge into a skill for someone to deliver in their role. I think there's a step before that, and that's about creating an inclusive culture that allows that talent to feel that they belong and feel like there's a place for them to then want to bring in their skill and their ability and then receive the support to develop and therefore add value to the organization. And I think that's one of the biggest challenges again in financial services overall. It's that feeling of being an inclusive culture where your difference is accepted, whether it's by race or class or economics or whatever the difference is, gender, whatever it may be. It's feeling that you can bring yourself into the organization. Then you can then be able to get access to the support and skills that you need in order to become the best that you can be for yourself. I think that's probably the biggest challenge. I think the training is right. Once you've done all of that, now you want to put the right type of support and development to the right type of person to deliver. That's where I think training makes a really great difference. But I think before that, it's making sure you got the right culture in the first place.
So, Joe, how do you reckon you bridge that gap then? You just mentioned that you're the right talent, but obviously some people may feel a type of way joining the company, maybe cultural differences or whatnot. So how do you reckon that financial companies can bridge that gap to obviously make everyone feel inclusive to get the best out of said person?
Yeah, great question again, Donna. I think for me, in my experience, what I've learned is that I want to know that there's impact of delivery. So if I'm going to bring you into the organization, I want to know that there's already impact of you being able to deliver, evidence of your impact to deliver in the role that you're coming in to do. So what have you done in the past? What was the benefit to your organization, to the stakeholders, to those whom you've worked with? Then it's also then going backwards to say, right, I already got the evidence of impact. What do we need to do to support you in order to bring that impact to us or for us, or to do it in the way that we need in our environment and in our area of influence? And so that's about then having a much more inclusive approach to supporting that individual person. I hear you that some people may feel away and go into an organization where they don't feel, their culture will be accepted, or they don't feel their difference will be accepted, or they don't feel as an individual person that the values don't align with their values as an individual. But I think it's about also understanding that a business is a business. And if you're coming into an organization, you've got to be able to deliver in your role to help the organization achieve its objectives first and foremost. Then it's about how can you then, what support do you need to add value to enable that to happen? And that might be controversial to some in thinking, well, it's people first. Well, if it's an organization, the bottom line is what they're going to really look at. How are they going to be able to reduce costs, make money, or ideally both? And how are you going to contribute to that as this person coming into the organization? And so there has to be this balance between the right talent and delivery and productivity, and the ability to do the role and deliver on the outcomes that are needed for the organization. And if you can prove both, then you're going to be someone that will get that investment regardless of your difference.
Yeah, I definitely agree with that. And I guess from what you put into a person, I think it's a transactional relationship and mutually beneficial, and they'll expect the same thing. They'll want to help the company more, and at least you will be able to grow together. But I want to kind of reverse that and talk about like client side and client expectations. These technological advancements, client expectations are evolving, especially in this digital first world. So companies should respond to obviously changing client expectation with technological advancements.
Well, first and foremost, the client is always first. So arguably it's who's the customer here, if you get what I mean. If you're truly understanding the needs of your client, then you should be building a business around the needs of your client, and therefore you've got to make sure that you're constantly engaging with the client. And so from how do you develop and support the client, and how do you respond to the world that the client's in? Well, for me, that's possibly easier if you make sure that the client's needs are at the center of everything that you do. If you're creating solutions for a problem that's not recognized by the client or recognized in the way that the client wants to be recognized, then all you've got is a very expensive hobby, particularly as a business owner, or you're an organization that's going to be in a saturated market because everybody else is delivering those solutions already and you're trying to break in. Or you're going to be an outsider that's not getting in to meet the client's needs and therefore not part of that kind of client's, on the periphery of that client in order to see you as a solution or service or product that they want. Putting the client's need as first and foremost, and then adapting your business to support that need through innovation, through AI, through whatever you may want to use to support that need, that becomes key.
And also in relation to financial firms as well, are you seeing a lot of common mistakes that they are making in relation to actually adopting new technology?
If I'll be honest with you, I think in financial services specific, there are a number of consistent things that I'm seeing in terms of adapting to the pace of technologies and disruptions that technologies in particular are making to their organization, whether it be internal in terms of their operations, their systems, their processes, efficiency models, etc. Again, the attraction of talent and how, you know, talent is using technologies to almost do some of the things that the organization isn't fast enough to adapt itself to. And therefore you're seeing a proliferation of more people starting their own business, more side hustles, etc., because people are working out how to do things for themselves. So why do they want to lean into an organization? So there's some consistent things. I think the things where I'm seeing variables is that return on investment. It's how much money do we need to put into something in order to get the return from it. And therefore, when it comes to these technologies and the disruptions, the level of investment put into the solutions is variable dependent upon the organization, the market that they're in, the sector that they're in, their current focus, etc. So I think it just depends on the organization you're dealing with, rather than saying there's a blanket thing that's relevant for every single organization. I think it's quite personalized in this day and age. And in fact, I see the future of financial services becoming much more so. It's the use of AI and said technologies in order to create a much more personalized approach, a unique approach to delivering products or services to meet a customer's need. That being said, in our business, we certainly saw that post-COVID, an immediate retraction back to some of the old traditional ways of working within financial services, you know, use of old historical data sets, more reliance on credit risk, really homing in on existing customer markets because it felt safer after going through a period of disruption where they were completely out of control. Now we're beginning to see it slightly move the other way, where traditional ways of thinking is now being almost reversed again to say, no, we need to be a little bit more out there. We need to be a little bit more competitive. We need to be out there competing with the new technologies in this volatile economic environment. So there's just been a bit of an up and down journey that we're seeing in financial services overall, particularly from our business point of view.
Yeah, no, of course. And I think, especially in your business specifically, you're very focused on data-driven insights and within financial intelligence. But how do you see AI transforming decision-making within financial services?
I think again, maybe controversial to some, it's not about the data. It's about the actionable insights that you get from the data and how do you use that. The role of data, though, is very important because you need to make sure you've got the right data inputs coming in. You have to make sure that data is clean. You have to make sure that data is not biased, because all you're going to get is insights that are going to be aligned to the things that you already have, don't want, the biases that you're trying to get rid of, etc., etc. But ultimately, you need insights that can help you to make better decisions. And I think we can't get too sucked into the role of technologies and data-driven technologies from our world anyway, because those are just enablement tools at the end of the day. These are enablement things that help you to be able to get the right information to then do something with it. So decision-making for me is about, well, if we are confident that we're getting the right data in, and we're confident that the processing of that data is in the right manner, then we can be more confident about how we use the insights that we get from that in new and exciting and different ways. So, for example, we started our business to really focus on SME lenders who needed deeper insight on the performance of underserved businesses to reduce their risk of lending money to them. As time's gone on, we've seen that same problem now within the VC space and the private equity market. So we've evolved our business to also develop solutions that are looking at those spaces too. Now, there are similarities, but there are also very clear differences. So the data inputs that we get in those different markets will be slightly different, which will mean the insights will be slightly different, but that's fine because we know that the inputs we're getting is giving us the insights that we need to support the specific needs of those different markets. But we know the foundation is the same. So therefore, we know we can provide the solutions that are across different financial markets with different insight levels. But we know that the methodology and our focus and the infrastructure that we use in order to support those different needs is relatively the same. We just know that the data inputs will be different, the insights will be different. And as long as we're controlling that in the right manner, then we'll be able to use the insights and provide a greater service to those markets. And that's kind of how we look at it in that way.
That makes a lot of sense. So obviously you touched on whether if firms have the right data, that's essentially the starting point. But although when we've spoken to like a bunch of different people, they've said they still have like outdated processes. So I guess my question to you is, where do you see the biggest inefficiencies, and how do you reckon technology, for example, automation, can help address these like outdated processes?
I see that question from two sides. I think the latter is the processes and systems that you then have in your organization to deliver on what the insights are telling you. And that's why we have our consultancy side of our business. It's not just about use AI, get the data. It's like, let's work with you to make that, you know, realistic and practical in the environment that you're in the organization, and to meet the needs of all your stakeholders in a way that you wish. So that's I think the former side is about, and it's about leveraging, it's certainly in our business, my former experience as a corporate governance auditor. So when we work with our clients, I've been able to use that experience, with the team to ensure that we are helping those organizations to assess their own processes and systems in the first place. So the former then gives you a complete end-to-end level of support, because we can help you find the inefficiencies in your processes and systems before we even bring in the technology to help get the insights that then to use. It means that there's a full 360 level of support that can be provided. And I think the former is where we're seeing a lot of the challenges in the industry. It's the understanding that your systems are outdated. So if your systems are outdated, how do you even think you can compete in the modern and traditional markets that you're in at the pace that they're going at, with the volatility that's in those spaces? So get your house in order first, then you start thinking about how you can compete and then innovate for the future. But it's the outdated systems and processes, often based upon old thinking, traditional conservative mindsets, particularly within the financial services space. And if I'll be frank, a complete driven focus on profitability at all costs. I think we're living in a world now where you have to be profitable as a business, but you also have to prove multiple impacts across different markets, across different areas, whether it's social impact, environmental impacts, longer term governance impact, etc. There's multiple impacts, multiple versions of profitability now than ever before. So yeah, get your house in order first, I think, is the key thing. Then you can start to set a great framework of moving forward.
So when you touched on making sure companies get the house in order before taking that step, so the companies make this first step in digital transformation, what do you think the first critical step would be in doing that?
I think first and foremost, it's helping them to articulate their challenge with doing that. Because it'd be wrong for me or any organization to come in and say, right, you're doing this wrong, because then it becomes a very transactional process. If you're really committed to change, then you have to do it in a collaborative way. And that starts by helping the organization to understand their own challenges in a way that helps them to kind of see, right, we want to get from A to Z. We know that we've got challenges here. We know we need support in those areas. And these are why these are challenges. How do we plug those gaps? What support do we need to plug those gaps? Once they take ownership of the challenge, rather than say, well, this is our challenge, you need to deal with it. If they take ownership but are working in a collaborative fashion to solve those challenges, then they have complete accountability throughout the whole process. So it doesn't become a transactional process where we do all the work. We want to come in and work with you in a partnership and in a collaborative way, because when we do step away, you need to carry it on. So you have to have a sense of accountability and ownership from the beginning of the process, not when we've come and done the work and handed it over to you. Now, some organizations may have a different philosophy and a way of working. They may enjoy coming in just being that transactional. But for me, collaboration and partnership is about long-term business opportunities as well. And we want to build that trust. We want to build that support. We want to build that relationship with the client. And so let's help you get that accountability from the jump and then see where we go from there.
That's amazing. So how do you see balance automation and obviously balancing that while still maintaining the personal touch of this industry? Because we know in the financial industry that human interaction, human touch is still very important. So how do you still ensure the balancing of the both?
They have to be hand in hand. So, people are the people. People create the systems. So ultimately, you need to make sure you're providing the right type of support for the systems. Now, don't get me wrong, particularly with AI, the systems will learn and start to do things that we can't even maybe think about as human beings. But ultimately, it's people that create the infrastructures, they create the models, they create the algorithms, they create the logics behind technologies. So who are the people and how are you supporting them? How are you ensuring that there's processes in place to reduce bias in the creation of these systems? How are you making sure that the people who are responsible for the development of these systems are doing it in the right way, are aligning it with objectives, both internal and external for your clients? How are you making sure that there's the right training and support in place for the talent and the individuals working on these systems? So it has to be a balanced approach. I don't think it's one or the other. And I don't believe that AI is going to take over the world and take over human jobs. I think it will make some jobs redundant where there may be much more mundane or boring or repeatable tasks, but you still will need people in order to deliver on what the technology is doing for the organization, whether it be through the insights, whether it be through the delivery of services, whether it be aftercare services and ensuring that the client and customer is still being supported. So you're always going to need people, but there needs to be a kind of a balanced strategy in terms of technology and human intervention.
Yeah. And I think that's all. Sorry, so I was going to say, I think that's one thing a lot of people's thought process behind AI as well. They like to think that AI is here to take over and get rid of jobs, but I think in a nutshell, it's here to complement. And I think as more as people realize that, then the more people are more willing to actually adopt it and stop having that fear in the back of their mind.
Absolutely. Like, in our business, we developed our own proprietary automation AI. So we designed our AI model from scratch. Partly because it just gives us, our IP value and feeds into our whole kind of values and organization in different ways. But ultimately, we didn't need to have a super complex AI system either. We just needed something that did a specific role that kickstarted the flywheel of everything else that we needed. So we were very clear on the use of AI in our organization and the control of that. But we knew that the value that we provide will be value that we can hand over to our clients and our partners and our stakeholders, because that's what we wanted it to do. We wanted to generate insight that they could use and make bespoke to their organizations so they can go on and create the massive impact aligned to the values of our organization, which has always been around that sense of financial inclusion for all businesses, regardless of their difference. And that's why we built our automation AI model around. But it's a very simple model, but it's so crucial to the delivery of what we want to do. And therefore, the people element for us was about making sure that we've got the right people in the help, design that with the right values aligned with what we want it for, but also in a way that can produce the type of information that will be equitable for our clients to be able to use, so they can then do things in a much more inclusive and equitable way. And we had to make sure that process was aligned, and we achieved that. But we've still got so long to go, as far as we're concerned. We started trading commercially, I guess, 3 years after we were founded, 2.5 years after we were founded. So we're still a relatively young organization, but we also recognized how quickly we could scale by focusing on being lean, focusing on those key components in the right way, in the right order. And part of that was about building an AI enhanced product that can get commercially viable before we need to start thinking about heavy investment into the team, staffing, and everything else. So we were very lean on purpose, and we achieved that outcome, and everything has gone exactly how we wanted it to. So yeah, great things, great time, great opportunities, but it's about having focus on what's most important first and how technology plays a part in that in order to start everything else.
I just wanted to flip the script a little bit. So what would you say are the risks or challenges in relying on AI and automations too much? Like, how do you think you navigate the balance?
It's a great question. If I'll be honest with you, there are so many unknown risks. So, in terms of what we can see, what we do know, it's been heavily reliant on models that themselves can become outdated because of the pace of change in the space. I think that's the biggest risk, partly because people see the value of AI in particular. There's constant innovations happening in the space. And we saw that with the introduction of DeepSeek against OpenAI and ChatGPT, which no one probably saw. And more specifically, the fact that no one saw it at a lower cost base than it took to create what everyone was revered as the nirvana of AI. Within a few short months, everyone's like, okay, that's no longer the nirvana of AI. What can I do to be the next DeepSeek? You know, to the point where OpenAI are now having to make changes to their solutions and their products faster than they even wanted to, just to remain competitive in a space that arguably they've owned for the last couple of years. So it's really interesting how that pace of change in of itself has become a massive risk at the highest level. So at a kind of lower level, if you like, an organization like ourselves and industry organizations who are trying to do things in the right way with AI, responding to that pace of change can often take a lot more resource than you had. It can take a lot more time than you thought, and it could take a lot more reliance on people and resources that you maybe didn't want to.
Yeah.
But until you get to a particular level, you have to do what you need to do in order, and in the right way, and in a positive way, and obviously a legal and regulatory way. But you have to do whatever you need to do in order to get to a point where you can remain competitive, because the pace of change is that quick. So I think, Darnell, that's the biggest thing. It's the risk of not being able to keep up with the pace of change when using AI. I think that's the biggest risk.
Understood. Would you say it's, number one, hard for firms to be competitive in this rapid evolved industry now? And what would you say would be the main important shift that they need to make today to stay competitive?
Be very clear on your niche and validate your niche before you make heavy investment in the space. I'll give you a really simple, maybe off-piste example, but say, for example, you have a vision, say in 10 years, you want your organization to be X, the typical phrase is the X of X, the Uber of this or the Airbnb of that, or, whatever the phrase may be. But you want to be something, you got a very clear vision of what that something is. But you're starting from here, so that's a 10-year vision. So along the way, there's going to be different iterations and different evolutions of your organization to get there. You won't be the same business in 5 years that you are now. You probably won't be the same business in 12 months that you are now, let alone 10 years. So the key thing is being very clear on what is your super niche. What is the thing that you want to be known for? And it might be a subset of a existing market. It might be the subset of a subset of a subset of an existing market. But that might be the first stepping stone to give you the heavy traction and the foundational structure in place to be able to then build upon the business and scale from there. So having a very clear focus on a super niche gives you the opportunity to create a bit of a moat around your business away from competitors, will give you the space and the revenue and the ability then to reinvest in the resources in order to be able to scale and become competitive in a wider market down the line. We often hear about kind of blue ocean theory and those types of ways of thinking and being a whole new space. I hear that, but whose needs are you supporting based upon the level of resource and ability to compete that you can now? And then that might shift down the line when you're at another level, and it might shift again when you're at another level. But what's your super niche now? So for us, for example, at GFA, our super niche, financial inclusion, high growth businesses within underserved markets, and identifying them and evidencing how they are growing and the ability for them to be super high growth businesses, and doing it from a data-driven approach. We often focus particularly on women, ethnic minorities, disabled founders, but we can work with any business in any underserved market. But that's where we start in those 3 areas, because we know that the economic contribution of those 3 groups is actually not being fully appreciated in the mainstream market. And often because there's not enough insight about how those businesses are performing in the way that the traditional financial system regards those businesses. Technology and AI has been able to change that around. So that's been our super niche that we've started from, which is now evolving into different spaces. So having that super niche is important.
Yeah, no, it's definitely clear. And I feel like having that niche is important, but I feel like even with everything you've said in this podcast, you made it clear that the client's focus is always front runner.
100%.
Yeah.
100%. Like, sorry to tell you, but for me, whether it's an underserved business in an underserved market, or whether it's a massive Silicon Valley tech giant that's getting billions of years of funding each year, there's still a fundamental client need that needs to be solved.
Yeah.
So the question is, are you solving that need directly, or are you working with those and supporting those who are serving those needs directly? With us, we went down the B2B route. So we saw the need over here, but we also knew that if we support the financiers who are supporting those markets, or if we can help them to understand how to support those markets better, financially from a business point of view, the revenues will be better for us, but it allows us then to reinvest back into the resources that can then double down and support to tackle those needs at a greater level than us trying to do it directly ourselves, because unfortunately the market didn't have the level of resource that we would need in order to achieve what we needed to achieve as a business to support their needs better as a startup ourselves. When we get larger and greater, we could flip that model and work directly with the end business or what have you. So you have to look at your business model and understand what makes sense for where you are without losing sight of where you want to be long term, and how you want to help solve that customer's need long term. From where we know where we're going to end up, we are not going to be the business that we are now. But we know that technology will be central to accelerating our support for those needs more than we can do now. But what we're doing now is working, so we know we're on the right track. And that's kind of how we kind of pan out what we're doing.
Yeah. So just to quickly just touch on what you just said, obviously you have got a target audience who you are specifically looking to serve, but I know you are still expanding your reach quite aggressively. So what would you say is your biggest learning curve in getting your solution in front of the right sort of financial firms whilst you're looking to expand?
Don't go too broad too early, and be wary of great opportunities too early. So when we started our business, we went straight in at enterprise level as a fintech startup. So let's remember that we founded our business. Well, I founded the business in 2019. We went to market in February 2020. COVID hit in March 2020. So we spent the first year between founding and launching in February just trying to get an understanding of what this needs to look like as a business and just doing some pilots, etc., etc. So by the time we were ready to make our big push, COVID hit. So we made a decision to stop commercially trading for the 2.5 years of COVID, when including the kind of release period straight after the lockdowns, and use that time to work with our target market in order to build our product alongside their needs. Because we already knew what their needs were pre-COVID, but the whole market had been completely disrupted. So that means what we planned to do was not going to work in a disruptive market, because our very target market didn't know what they needed anymore in the right way. We knew what they wanted in terms of outcomes, but didn't know what they needed. So we decided not. So we earned no money as a business, as a startup for 2.5 years, and we made that strategic decision to do that. When you think about that, it's not because we couldn't have tried to make money. We decided not to make money because we felt that the focus on creating a product that is so intrinsically designed to the needs of the client is going to be more important for the long term than just trying to survive as a business now. And it was hard. We got some Innovate UK money. We talked to some of the R&D. We had a private angel who gave us some, I'll be transparent, they gave us less than £20,000 to help build our first MVP when we eventually came out back into the market. But for 2.5 years, we made no money whatsoever. But what we did do is get all the value that we needed to ensure that when we come back out into the marketplace, we can go and approach and work with businesses at the highest level. So that's why our first client was one of the top 5 UK banks. As a fintech startup, as a solo founder, my first client was a major top 5 high street bank. And not just the fact that they were a bank, but they saw our longer term vision. And so the funding that we got from them and working with them also helped us to fund our longer term vision. So we now have a network that sits alongside our business, which has about 160 financial policy, businesses and technology leaders who give us constant insight into what's going on across those 3 market areas. So we've got our own living, breathing R&D kind of network for our own business now, only because we took the time to really build alongside the need, which is why it's given us the opportunity to now think about how we can expand our business when we've only been commercially trading for about 2 years, 2.5 years. So strategically, sometimes you have to make the sacrifices up front and believe in the vision so much that you'll get the return down the line. And even as a new startup, which arguably most startups fail within the first 3 years, about 95% fail. We're still here 5 years on. I'm still a solo founder. I still have less than 10 people in the team. I'm the only full-time employee in my business. And I'm proud of that because I've been able to operate a model which is so lean, yet can compete with the biggest competitors in my market, all because I've learned how to use technology, but focus on customer need, maybe better than them. And we were profitable in our 2nd year as well, by the way. So profitable fintech company that works in the highest level, better and faster than my competitors. I'm quite proud of that. And that just gives me even greater confidence to know what we're about to do. And people will see that when they need to see that, but it's going to be interesting.
Kind of that part that's pumping me up.
Oh, look, I started the conversation when we were just began the podcast when I started talking about, I guess, the personal side of this journey as well. And I think one thing that's really important for me is that because of where I'm coming from as a Black person in the technology space, quite often I've come across many people in our spaces who've kind of what we call code switched themselves individually, where they've lost their sense of authenticity about who they are. What's given me strength in what I'm doing and what I'm going to do is that my own cultural background has given me the sense of values, disciplines, and the cultural conditioning to harness the types of skills that are inherent in our communities that I feel have been absolutely aligned with technology. So the fact that as a culture, we've had to be resilient, we face challenges every single day, we face hurdles every single day, we're perceived in a particular way every single day. You can adopt those things as negatives when you go into these newer spaces and go in there with a chip on your shoulder. For me, I flicked that early doors. For me, those things are power levers, because when it's all said and done, my real life experiences make the world of business child's play. And I'm not saying child's play from a point of saying, yeah, we're sitting here and all our, we've got money coming out of our this and got our orifice and, with this, that, and I'm not saying that, because we're still on a journey as a business. But what I am saying is that when you look at life versus business, life is far more harder and far more important than growing a successful business to me. But the lessons I've learned in life have 100% allowed me to accelerate the value of the business that I'm building and the reasons why I'm building it. And those lessons are absolutely founded in where I'm coming from, in terms of my culture, in terms of my race, and in terms of the experiences and the wisdom of those who've come before me. And the moment I lose that is the moment I lose my own authenticity about my business. And so for me, it's not a Black thing, but it is an appreciation of recognizing that my experience is my experience. And if I put my experience to one side for the sake of wanting to be successful in business, then what's this all for? What's it worth? And this isn't some kind of woke kind of approach to life. It's a reality check that it's about being your authentic self, no matter where you are, no matter what you do. But you have to understand what your core values are and what drive you and where those things are founded. And that's no different for somebody who's not Black, who's not male, who did go to university, because I didn't go uni. Like, it doesn't really matter. It's your experience is your own experience. But what you draw from that and how you articulate that and use that in your work. That's why we need an inclusive role that allows people to be themselves, regardless of what industry that they're in. I just feel that in the technology space, and with AI in particular, within financial services, those types of skills are the differentiator. And I'm all behind it.
I absolutely love it. So just about to wrap up. So what would you say for GFA Exchange's next goal for the 6 to 12 months?
Yeah, I mean, there's some things I won't mention yet.
Well, keep it a bit hush.
It's only secret. The world will see when they will see it. But specifically, it's about adding value into the venture capital and private equity markets. That's kind of our next push. We know what works in the lending space, but we've seen some great opportunities in those markets to help more businesses get more access to higher levels of capital to help them to grow their business faster. So the VC space is quite interesting, and private equity space is definitely interesting in terms of helping to unlock more capital from those markets to help businesses grow even faster at higher levels across different markets. So that's kind of our push over the next 6 to 12 months. Hiring more staff and kind of now started to build a much more of a formal team around what we're doing. With our extended partnership networks, we have access to about 30, 40 people at any one time in our business. So we effectively have a really good growing team, but having a bit more of a core nucleus of a team is where I want to kind of move next over the next 6 months in particular. And I guess the third part really is expanding our business abroad, and kind of working with partners in different areas in terms of actually having locations of office locations in some of those spaces. So again, have a look and see what happens over the next 6 to 12 months on that. And I won't talk much more about that side, but I'm very, very excited about some of the things that we're looking to do with some of our international partners. So yeah, interesting times ahead.
That's amazing. Let him warm, let him cook, let him cook.
Oh, listen, I've got things in it. It's there, but like any good meal, you have to make sure you keep an eye on it.
100%. You got to marinate the meat before it's ready.
Listen. Put that lemon on, put that vinegar on. Make sure you wash down that chicken early.
No, honestly, Joe, it's been an amazing conversation. A lot of things that you touched on really was heartfelt and really inspiring. So if our viewers listening, if they're looking to reach out to you, or also GFA Exchange, what's the best way for them to reach out?
Yeah, I mean, hit me up on LinkedIn, Joel Blake OBE. Go to gfaexchange.com. Click contact, comes through to the member of the team who's looking after my emails, and they will send it on to me. But yeah, just I'm approachable. I'm around. If I can help, I can. I will. If I can't, I'll certainly see what I can do to support either way. And look forward to hearing from some of your viewers.
Perfect. No, much appreciated. Thank you again, Joe. So
thank you.
For the Navvai Shift, again, thank you, Joe. It's been a pleasure.
No, thank you for your time. Really appreciate it. I wish you the very best of luck with your business too. And I know you're going to make an impact for so many organizations. So everybody watch out for Navvai too.
I appreciate that. Thank you.